Friends, today I have a very important guest to introduce in our platform. Let me welcome Mr. Ajay Modi, who is the director of Piper Serica Investment Managers. A brief introduction about Mr. Ajay. Mr. Ajay Modi completed BTech from Pune University, and he is also a chartered financial analyst and also holds a certificate in investment research and analysis from CISI Institute London, and he's been with Piper Serica for the last 8 years, and he's a director there. Prior to that, he worked for Thomson Reuters. Thomson Reuters, he was part of a team which managed more than 1 billion for two of the world's largest global asset managers. And most importantly, Ajay manages 1,000 crores in public and private market, and is also an active angel investor in Indian startup. With this small introduction, let me welcome Mr. Ajay Modi.
Thank you. Good afternoon, Venkat, and good afternoon to everyone who's watching this. Thank you for the introduction. Uh,
Yeah.
in fact, before you you say something, I think I want
Yes.
to add one thing. The only point of someone giving an introduction is to say that look, the person who's going to speak is having that qualification to speak. So while I do have that qualification, let me also put a one sentence in perspective that uh, while there is qualification as such, because going to talk about markets, let me tell the audience that look, I have made most of my capital that I have today through markets. I stay in Bombay. I bought a house in Bombay, and while there is some loan, most of the down payment happened through my holdings in the stocks. Uh, Everything that I have, the assets that I have in my life, have been built through investing and through the markets. So I wanted to put that in perspective more than my qualification.
Fantastic, fantastic. Yes, you have been always been a doer, and you used to implement across the market universe. Yeah. And my first question today, Ajay, market has reached a new height, the 71,000 levels of Sensex and 21,000 levels of Nifty, and the Nifty P has also gone slightly on the higher side than the normal average. So at this time, most of the investors are all thinking about, is this a good time to invest? So I would directly put this question to you to address this for the benefit of my investors.
So, no, that's a very pertinent question. At least today, when I think 3 days back, someone messaged me saying, "Congratulations, Sensex has hit 70,000." Today, that same person messaged in the morning saying, "Congratulations, Sensex has hit 71,000." So I replied to him, "I should congratulate to you in advance because very soon it will be 75,000 and 80,000 also."
Yes.
So that's a very pertinent question. Now, let's break that question into two parts. Part one is
Yeah.
to say that from an investor perspective, right? Forget everything else. From an investor perspective, uh, you have a lot of people who will ask you this one question: what's the right time to invest, right?
Yeah.
Or someone asking you this question today: is this the right time to invest? From my thought process, and I'm a big believer and follower of Warren Buffett. Fortunately or unfortunately, I do not have an Indian market guru as a idol or someone I follow. I have read a lot about Warren Buffett, Charlie Munger, Ben Graham, Peter Lynch, and Warren Buffett and Peter Lynch are two people I follow very, very closely. Now, when I say this, the point that I'm trying to make is look, if you ask Mr. Warren Buffett today that is it a good time to invest? He would say one thing that boss, whenever you have money, that's a good time to invest. If you
Yes.
don't have money, then the best time to invest also is not going to be the good time to invest for you, right? So,
Correct.
from an investor perspective, the best time to invest is when you have money, and the best time to redeem is when you need that money. Don't
Correct.
look at the markets to decide when to invest because uh, it's counterintuitive now. Because today we are saying that Nifty has hit a new high of 21,000. This is a new high in the last a lot of years since Nifty started. But there was a new high 2 years back in
Yes.
2021 when Nifty hit
Yeah.
19,000. That was
Correct.
a new high. Now, if someone would have said that cost it's 19,000, I should not invest, they should wait, right? That person would have been waiting forever. So,
Yes.
in a nutshell, markets will always, it's the nature of the market that they will go up.
Up and down.
Uh,
Yeah.
it's the nature of investors. I mean, if we are saying that Nifty has hit a new high, it just goes to mean one thing that today, anyone who's ever invested, forget anything else, anyone who's ever invested in Nifty as an index is sitting at a profit today, no matter what level they invested in.
Correct.
And markets will not stop. They will hit a new high, maybe not immediately, but some months later, some years later. So new highs will keep coming. I don't think we should uh, try to time that. That's one part of the conversation. Now, second is to say that look, I'm very jittery because uh, again markets are at a high. What if they correct from here?
Mm.
What if there is a 15%, 10%, 5%, 20%, whatever
Yeah.
correction? To that also, my answer is very simple. Look, let me ask you this. What if markets actually rally 10% from
Mm.
you will miss out. And this has happened. This happened very recently. Last month, I remember, I think closer to the end of November, when these state elections had
Yeah.
happened and exit polls were just out. Exit polls did not have a clear outcome. So a lot
Mm.
of advisors, investors I met said that was we should wait for the general elections because the December outcome is not going to be very good.
Mm.
BJP will be having a 2-0 score. They may probably win Rajasthan and probably win MP, but that will also be with a narrow margin. And they will not win Chhattisgarh for sure. And they will not win any other two states for sure. So BJP will find it tough, which means markets will correct. I had asked them this question that look, what if it happens complete opposite? If BJP
Mm.
comes out 3-0 by a very, very wide margin, what then? You will lose. Because you're sitting out, you will lose. And
Yeah.
unfortunately, they have actually lost because they took a wrong call on a party. Right?
Correct.
My
Correct.
point to them was very simple because they asked me this question, कि ठीक है आपने बता दिया now what to do. So my answer to them was very simple, and that's an answer to all the questions. That look, if you have 100 rupees to invest today, I think you should uh, put out 60 rupees to work and wait for the next 40 rupees to be invested. Don't keep all 100 in your hands now and say that look, I will invest only if there is a correction. It's better to put 60 rupees to work,
Yeah.
and if
Mm.
you get a 5% correction, put another 10. If you get another 5% correction, put another 10. If you don't get a correction, then maybe when some months later, you may put the rest 40 to work.
Correct. The staggering. There are so many investment options available for the investor. Very well put. And you have a very active PMS portfolio with a phenomenal track record, which is being doing. Can you throw about the processes being adopted in your PMS strategy? And there are so many service providers are there. And what are all the unique things which you have done, which has helped you to beat the indices by a fair margin, thereby creating alpha for the investors?
So let me again break this into parts. I think first, can I show the performance also here?
Yeah, yeah, we can have the performance. Maybe I will have it in the later
Okay,
stage. I will just
okay.
incorporate that.
So okay, so to kind of put things in perspective, our multi-cap portfolio is about 8.5 years old, February 2015
Yes, yes,
inception. And 8.5 year performance is 20.3% CAGR, which in simple terms, so that is 20.3% CAGR post fees and expenses over 8.5 years. To make it simple, someone invested 100 rupees in February 2015 is sitting on 550 rupees right now. So five and a half
five
times in
x,
eight
x.
and a
Yeah,
half years. Now, compared to that, the broad indices have had half that performance. So, someone who would have put 100 rupees in Nifty instead of my portfolio would be sitting on 2 120, if 100, that has become 220 today in Nifty, whereas it has become 550 for my portfolio. Now, the philosophy or the effort that has gone behind making the returns is uh, first, I would like to give due credit to all the portfolio companies and their employees and the managements of these companies. They have done a phenomenal job. We have had a lot of multi-baggers in our portfolio. We had companies like Apollo Hospital, country's largest healthcare enterprise. We invested at 1,000 rupees. Today, that stock is 5,500 rupees. Angel one of the largest digital brokers,
Indian broker.
we invested at three, I think 450 odd rupees, and that stock is at 3,500 now. So almost 10x return there. So one is that we fortunately back the right companies, we back the right
Yeah.
teams. Now, what goes actually behind making these kind of returns is, as I said, I believe in Warren Buffett's thought processes. And what I have learned from that is that there is one sentence that can intuitively describe my entire investment philosophy. That one sentence is back great ideas at a right price and stay with them. Now, let me rephrase, find great ideas at a right price and stay with them. Three parts to this one sentence. One, finding great ideas. Now, for that, a lot of research goes behind. We have an entire research team. We look at the macros, micros, but essentially we are stock pickers. So we look at opportunities and sectors where there is a lot of tailwind. There is consumer spending growing in that industry. There is more focus of the government in that industry. There is more focus of uh, the businesses are consolidating. Uh, Shift is happening from unorganized to organized.
Organized.
Margins are improving. So these are some triggers which help us identify industries. Once we identify industries, we do a lot of deep down into each of the companies in that industry. There is primary research. We go meet the management, we visit the factories, we talk to the distributors and retailers if it's a product or service. We talk to the bankers, we try to find out some ex-employees, do some search on Naukri.com, and then talk to them. Uh, Try to do a little bit of uh, very detailed financial diligence to make sure there is no wrongdoing in the company. And after doing all of this, what we come to is selection of companies. Now, sometimes we would want to invest in one company in a particular industry. Sometimes it could be more than one. It could be two. It could be three. Classic example is last year we invested actually heavily in textiles as a sector. So we
Mhm.
did not select one company, we selected three companies. One company was an exporter of bed and bath linen, one company was an exporter of apparels, and one company was an exporter of kids apparels. So three different categories, but textile exporters. And one of them gave a 3x return in 1 year. Another one gave a 2.5x return in 1 year. And the third one was up 70% when we exited. So sometimes we back companies, multiple companies in an industry. Sometimes it could be just one leader in that industry. Now, one part is this that you have to find great ideas. I think what is most critical and this I'm a little surprised at times because not a lot of people say this, but the biggest focus and the biggest wealth generation happens when you pick right companies at great valuation. So a lot of people think that good companies equal to good investment. That
No.
sometimes or most of the times does not happen. It is not true.
Ah,
Not every company is a good investment.
yes.
Not every
Yes.
good company can make good return. But if you back good companies at a great valuation, then you're definitely going to make a lot of money. So the idea is, as I said, find great ideas, which means doing all the great research. but backing them at the right valuation. If I am coming in and paying like 50 time PE multiple to a company, even if that company grows 20% per year CAGR for the next 3.5, 4 years, earnings may double, but the stock price may not go anywhere.
Yes.
And when I'm saying this, I can actually take example of a real company. While I will name the company later, let me give you some insight. December 2019, this company had a book value of 302 rupees, stock price of 1750 rupees. December 2023, this company has a book value of almost 600 rupees, stock price of 1800, which means absolute
Mm,
return on stock price is just
nothing.
3%.
Yeah.
The book value has doubled, which means
Mm,
the company has grown two times. This now while when we look at the numbers, it may be very simple to hear. I am talking about none other than Kotak Mahindra Bank. Kotak Mahindra Bank's stock price in the last 4 years has gone nowhere.
yes.
Now, we all will agree that Kotak Bank is a good bank.
Great man.
Uday Kotak is a great banker. There is no
Yes.
corporate governance issue. Earnings have been growing. It's a solid brand. It's a national level brand. It's among the top five private banks in terms of its size, etc. But still made no returns in the last 4 years. That's because 4 years back it was very expensive. It was trading at 6 times book value.
Mm,
Today it's at 3 times book value. What I'm simply saying is this that look, it is a great bank, but 4 years back it was not a great investment. So falling in this trap is very easy. That look, and people say this blue chip. They have this term called blue chip companies. I will
yeah.
invest in blue chip
That
companies and go to sleep. If you go to sleep by investing in blue chip companies at any random valuation, when you wake up, your money would have gone nowhere.
correct.
So it
Correct.
is ultimately very important to back good companies at a great valuation. That is where money is made. And lastly, which is what I said in my earlier sentence, find great ideas at great valuations, stay with them. It is
So,
very
stay put.
important to stay with the right companies. If you're seeing the growth, if you came in with a particular thesis and that thesis is playing out, you should stay with them. Don't lose because what happens, and I can give you an example of, for example, we have a company in our portfolio, Dixon Technologies. It has been
Yes.
hitting new highs in the last
Yeah.
weeks and months. We invested in the company. I remember June 2020 was the first time we invested in the company. It was a 1,000 rupee stock. In a matter of 1.5 year, it went to 5,000 rupees.
Correct.
So
Correct.
it was a 5x in 1.5 years. Now, I did not exit because I had a long term view, but I reduced my allocation because
Mm,
4.5% allocation had gone to 18% allocation. So I
okay.
reduced a large part of it, booked some profit, brought down my allocation, and stayed with the company because I knew that it is a long term investment.
Superb.
1 year later, 5,000 rupees had gone down to 2,700 rupees. Right? It was very easy for me to say that,
Yeah.
boss, this is very expensive. The growth has been slowing. Dixon, by the way, is India's largest electronic manufacturing
Yeah,
company.
actually, and the
So
biggest beneficiary in PLA also. Yeah.
correct. So
Yeah.
last year, last year actually, what was happening was suddenly mobile phone production was a little slow because after
Mm.
COVID, everyone bought new phones in
Semiconductor issue.
2020.
Yeah.
Semiconductor
China's
issue and all
closing
of
down.
that.
Yeah.
Correct. So that is why mobile phone manufacturing was a little slow, and that is why earnings had taken a little bit of hit for Dixon. But we continued to see the conviction of the management. They were adding new customers. They were kind of improving their margins. They were trying to bring down their cost, control the supply chain, etc. So we said that look, it's a leader in its space. I know the price has corrected to half. It's a great opportunity for me. I added a little more, and in a matter of less than a year, the stock is now at 6,500 rupees. What I'm simply trying to say is that I could have exited at
Mm.
2,700, saying that boss, I booked a lot of profit at 5,000 and I made most of my money. Now I should get out. Instead of doing that, I actually went in. I increased my
Yes.
allocation and the
When
kind
it is
of
available
money.
at a discounted valuation. Yes.
Correct. So staying with the company, and then it hit 5,000 again. It was very easy to say, boss, let's book some more profit. But uh, if I would have done that, exited completely, I would not have made the
Yes.
returns that I
Yes.
have made, right? So finding great ideas at great valuation and staying with them. That's in a sense everything, 101 of investing in a nutshell. Now, there are nitty-gritties in between that you manage the allocation efficiently. As in when you see companies doing going on the right track, you should keep adding to your allocation. And as in when your allocation increases because the stock may run up too fast too quickly, you should bring down your allocation. So all of that allocation management and rebalancing of the portfolio should take care of the risk management. And ultimately, if the idea is great, back them and stay with them. And in my experience, I've also seen, we were just discussing this today internally, that let's take a case study of all companies that have become multi-baggers for us. The common thread in them that we kind of realized because we were doing a diligence today. So the common thread we realized in them was one, they were great long-term stories. They had a tailwind. People are consuming more of their service, or there is excessive focus of the government or something of that sort. There is a good tailwind to the industry. The earnings are growing. There is a very good visionary leader at the top, uh, who's maybe the founder, CEO, managing director, promoter, whatever. And below him or her, they have a very good level one execution team. Sorry, just give me one second.
Yeah.
So they have a very good level one execution team. Finally, all these investments we came in at a very good valuation. We were not paying very excessive P multiples or excessive EV EBITDA multiples. In a nutshell, good industry, tailwinds on the industry, very good visionary leader at the top, very good execution A-level team, CXOs, and companies available at great valuation. That's the perfect combination of making money. And while not all companies will be available in this recipe
In that
every time,
combination.
even
Yeah.
today, when markets are at their highs, we see a lot of companies which are available with this combination. They're not expensive, they have not run up too much, they're not at their historical peak valuation, and execution is top class. So, while markets are at a high, I think we have a lot of opportunity. And what I'm saying, let me kind of give an example because while not every viewer will understand the company and the dynamics that I'm talking about. Let me put it in this way. Let me share a small story. Uh, if you go back to 2010, 2009, 2008, and let's say I'm sure you would have traveled back then, 15 years back, to maybe in the West, US, Europe, something of that sort for a vacation or uh, something. Let's say you went to France. Let's say you were in a group of people and they're all introducing themselves, people from different countries. When your turn comes or when my turn comes, I say, I'm Ajay, I'm from a city called Bombay in India. And then it is passed on to the next person. No one is paying any attention to India
Yes.
or Mumbai or anything. I'm talking about 15, 8, 12,
Years
15 years.
before. Yeah.
15 years back, India, when you went to any other abroad country, developed country, and said India, India was a country which they remembered by this one phrase: poor people, hungry people, right? This is what Bollywood portrayed to the
Mm.
world. This is what India is. Now, flip to 2023. I can vouch for this fact that look, you go to any part of the world and you say, you go in a room full of 20, 30, 40, 50 people, and you just shout out loudly, I am Mr. Venkat, I'm from India. I can guarantee you that if it's a room of 40 people, 35 people will put their head up to see who you are.
Yes.
That's the kind of respect India has. I'm not
Correct.
talking about
Correct.
India as a
True.
country.
Yeah.
Now, what has been the change? I mean, in the last 10 odd years, what's that massive change why India's image has seen a complete makeover? Uh, and let me give a disclaimer, I am apolitical. I am not leaning towards any political
Yeah. Yeah.
party.
True.
And
Yes.
while I may not have enough facts and figures to say whether there have been tangible economic benefits in the last 10 years, what I can tell you is right now in India, we have the exact same recipe. We have a visionary leader at the top, right? That visionary leader is going across the world. Some opposition parties are uh, using that and saying that the prime minister is always on a trip or something of that sort. And I'm saying, let it be that way. He's traveling so much, he's visiting so many countries, and every country today knows what India is. Every person in the world, I'm sure, can locate where India is. They see India as the next emerging superpower. That's because
Yeah.
we have a visionary leader at the top, very strong execution team, which is his cabinet of ministers in the center and states, etc., etc. Fortunately, our rail minister is the guy from Harvard. Our telecom minister is a guy, very well educated guy from IIM, etc. All our bureaucrats, all our senior level minister, cabinet ministers, they're all very heavily qualified, very nicely qualified people. That's probably the first time in our history that we're seeing such qualified people running the show. So great leader at the top, very good execution team. And as we speak, India's P multiple is just 21. 21
Mm.
time P multiple for a country that is growing by 8.5%, right?
Yes.
Probably, I think while we are saying that, look, India is expensive now, markets are at a new peak. I just said, what's the typical formula for making money? Great visionary leader, solid execution, tailwinds on the earnings, and great valuation. I think in India, we have all four of this right now.
Yes, very well put it across. Yeah, and the great development which has happened in the recent time is the gift city which has been incorporated at Gujarat, and you also have an offshore fund, which is the Piper Serica Numero Uno fund, where it takes investors, NRIs, who can contribute from their currency, whether they are from US, UK, Singapore, or any other country, and they can, without currency conversion, they can take back the money. And it's also an opportunity to investors or who wants to invest in India, who can be also non-Indians. Can you throw light on that performance and also how it can benefit those people to plan their financial freedom?
So we have a fund in Mauritius. It is
Yeah.
ultimately investing in the stocks in India, the same portfolio as our onshore PMS. Uh, Now, this fund in Mauritius, one, the minimum investment here is $1 lakh, 1 lakh USD. This fund essentially is for NRIs and non-Indians both.
Yeah.
NRIs, because it is very difficult for them to open a trading account, demat account, bank
Yes.
account in India. It is very cumbersome. And at the same time, a lot of NRIs are probably second generation. So they are not even NRIs, they are OCIs, PIOs, etc.
Mm.
And
Correct.
a lot of people who've gone abroad may not want to come back to India and settle down. They're happy where they are. And they want to also invest in their offshore liquidity. They don't want to invest in rupee. They don't have a local liquidity. So we had created this fund in June 2019, specifically to cater to this class of investors, international investors, who are non-Indians, and NRIs, OCIs, PIOs. So in terms of the fund, it's very simple. It's like a mutual fund, mutual fund. It's a fund where onboarding of investors is all digital and minimum investment being $100,000. That dollar is brought to India, converted to rupee, and then ultimately invested in the Indian stock. The benefit is investors get a dollar NAV. For investors, performance is in dollars. They invest in dollars, they redeem in dollars. So
In
that's
dollars.
a good part for them. And this fund has already been in existence for over 4.5 years now. Uh, I mean, we are at the 30th. I mean, we've finished 4 years in June 2019 and 6 months out after that. So 4.5 years actually.
Yes.
And the performance has been very good, thankfully. The since inception CAGR is about 17.5%, post fees, post expense, and post fund level taxes. Compared to that, Nifty 50 USD index is returned about 8% CAGR over the same period. So we have beaten the index by more than
Okay,
2x.
fair margin.
And
Yeah.
also, it is ultimately a great vehicle for if you're an NRI, specifically in the US, because people in the US find it otherwise very difficult to invest in India. The
Yeah, correct.
taxation has multiple layers, whereas from this fund's perspective, the fund issues a tax credit certificate. The fund pays 10% long term, 15% short term in India, and then gives a tax credit certificate to its investors so that if there is any capital gain tax in their country, they can use the tax already paid by the fund to offset part of or almost all of their capital gain.
Yes.
So that way, it's a good proposition for NRIs and non-Indians.
Very well put across. And I am also know that many of our investors are also invested in the startup. For the limitation of time, I will have a separate session on that, so that it will also benefit the new investors who are planning to invest in their angel fund thing. And before I end the session, any final thoughts which you would like to give it to my investors?
So I want to, while I will share the slide separately with you, I
Yeah.
want to kind of tell people one thing that look, it is very easy to get lost in this near term conversation that look, oh, markets are rallying, markets have rallied so much in the last 1 year. Uh, while we are looking at the near term data and saying that in the last 1 year, markets have given 20-25% return, let me also tell you last 2 year CAGR of Nifty is barely 6%. So it's not uh, something
A
supernormal
great
that
thing.
has happened in
Yeah.
the last
Correct.
1 year. And even if
Correct.
you go back and see 5 year CAGR, that is also just about 12%. So it's not that over 5 years Nifty
Mm.
has grown 4x or something of that sort. And there is enough data to show. And let me give you some numbers. US as a country has a GDP of $22 trillion dollars and a market cap of $55 trillion. dollars. China has a GDP of approximately $16 trillion dollars and a market cap of $25 trillion. dollars. Japan, a GDP of $5 trillion dollars and a market cap of $12 trillion. dollars. France, GDP of $2.7 trillion dollars and a market cap of $4.5 trillion. dollars. India, GDP of approximately $4 trillion and a market cap also of $4 trillion. Almost all the other four countries that I talked about trade at more
Mm.
than 2 time multiple of their GDP in terms of market cap. India's collective market cap is just about $4 trillion.
Yes.
Let me also give you a very interesting fact. Apple, which is one company, has a market cap of about $3.2 trillion. dollars.
Yeah.
India, as an entire country, has a market cap just 15% more than Apple's market cap.
Yes.
Now, let me ask you this. A lot of people ask me a question. Before I stop, I want to ask you and the viewers this question. If I give you $3.9 trillion, dollars, not that I have it, but let's say if I give you $3.9 trillion, dollars, would you want to buy one Apple and maybe one another small company? Or would you choose to buy an entire country with a few thousand very large enterprises, a very growing startup ecosystem,
Young
a rapidly
population.
growing GDP, a population of almost
Yeah.
140 crore people, a consumption of 140 crore people, rapidly growing per capita income, very stable, solid, and sound political ecosystem, rapid spends on infrastructure, leapfrogging digital infrastructure. Would you want to buy this entire package for $3.9 trillion? or would you want to buy one company?
One company. Yeah.
So I mean, while people are saying that look, India is at a new high, look, India is at a new high, but it is still less than Apple and Microsoft put
Yeah.
together.
Put together. True, true. Very well. It was a very enriching with a lot of stories and a lot of data. And I look forward to connect with you once again on the startup ecosystem and to touch more on that angel fund, which many of my investors also invested. And I also see that you are also coming up with a second tranche of angel fund in the coming days. Maybe I will get in touch with you for a detailed discussion on that. And thank you very much for sparing your invaluable time and for the benefit of my investor to come into the channel and share your views. Thank you very much.
Thank you, Venkat sir, for organizing this and giving me the opportunity to actually come and speak to your investors. I look forward to talking to you again on startups and on more opportunities about India.
Yes.
Thank you.